Welcome to MegaTrade101.com's video presentation on the foreign exchange market. And today we will be discussing the dollar, US dollar index, the euro, and as well as the euro pound cross rates. Today is the 23rd of August 2012. Likewise, this video supports our MarketView report on the US dollar index dated on August 18, 2012, where we have identified the technical perspective and analysis of the US dollar index on a daily basis, where we have applied several technical tools prior to a consolidated move of the dollar for the past few days, as indicated here on the daily candlestick formation, prior to the move that it has made today. However, we felt that it was necessary for us to show the market view analysis that we have indicated before on the 18th, when a bearish signal was actually indicated before the downturn, as there was a selling pressure, which is a top heavy signal shown on the price divergence, contrary to the stochastics as well as the relative strength index as indicated here. And going to the present formation, it already had moved lower to this previous support level, where we have indicated a 3-method Fibonacci rising fan formation that we have applied prior to that down movement. And we will show you that on the current price level that it is currently working right now. And this is the current price of the US dollar index, working at the 81.46 basis point. Let me get this crosshair out for the time being. And it had moved and opened basically at the 81.38 and slightly moving higher to the 47 or 81.47 basis points. Well, before this actual 2 days down move was simply due to the Federal Reserve's minutes, which raised markets' hopes for investors that there would be more monetary stimulus, while the US stock market raised most of the losses, while the Treasury bond prices rose. And subsequently, from the time of that particular consolidated move of the dollar index, such a move would be likely to increase the money flows into riskier assets such as equities and commodities, thus prompting the US dollar to move lower, and currently at the 81.46 level. Other than the technical move that we have shown you in the earlier chart dated the 18th of August, the US dollar looked on the technical basis more of a top heavy, with selling pressures already signaling a down move prior to the catalyst that has been mentioned, pushing the dollar lower. While that said, even the weekly formation of the US dollar index here indicated that it has reached an initial support level at the 81.46, although the low here is already, let's see if we can get it right here, at the 81.37. Please look at your left hand screen that there is still a possibility that a move lower to the 81 level, which is here, would likely be a touch prior to a pullback, which would happen within this Friday's closing for the week, as well as the subsequent last trading week of the month, although such indications for monetary easing is still on the air, rather than any retrieval for the prices to move higher on a daily basis would be a corrected move. Meanwhile, our latest MarketView report dated August 20th, where we've had indicated that a strategy on the ability to spot a potential trade before this actually all happened, concentrating more on the US dollar and particularly on the commitment of traders report, which we have indicated as well and included that report on the US dollar index in our August 18 market view. This was then on the 20th of August, where on a 4-hourly chart on the pound, we have indicated a level of a signal, though it made a consolidation of an up movement from a previous downside and looked more bearish before the actual up movement would have been made. However, the extensions here for cable beyond the 57.50 and 1.5880 trading range, with enough volumes building towards some market volatility before the end of the month or earlier, which so happens that due to the FOMC minutes, which triggered a good rally for the sterling pound, which corresponds to the down movement or decline of the US dollar, has triggered or became the main catalyst for that particular rally, alongside with the Euro pound daily chart that we have indicated here. But going back to cable on the 4-hourly chart here, the previous chart that we have indicated or showed in our market view report has extended and did achieve its 1.5911 high, currently working. This is a live market that we are recording right now, and our initial target was at the 1.5880 level, which is now currently the price levels, give and take a few pips. However, the follow through breaking that particular range of 1.5814, breaking point on the high, moving higher, which we also have indicated a secondary buy or long position from our initial price level at this level of 1.5704 level, where the trading range on the low side broke from a consolidation, first high penetrating it at 1.581415. Okay, but the key signal on the low side here was the previous high of 1.5722, dated the 21st of August. With that said, momentum has gained extremely well, with stochastics showing a positive breath, alongside with the Euro pound on a daily basis, with the Williams percentage rates on a higher note, not as big or dramatic as the Euro Pound cross rate. This is a side-by-side comparison where the daily of the Euro Pound cross rate, if we switch this into a 4-hourly chart, then the next target level would be at the levels of 0.7908, which is approximately just there with a high of 0.7908 level. So looking at it now, transforming it into a daily on both charts would signify that this particular trend line is being retested now, currently at this particular moment. Switching it to a weekly on both currency pairs, you would see that this is way already above its moving average, valued at the 1.5655, which is actually the support, although there were indications on a weekly basis that this particular formation on the triangle would have given a negative outlook, which also coincides with an equidistant channel on the down trend within a rising channel. However, this particular breaking point of the range has already been penetrated, and the bullish formation for the pound has been confirmed with the decline of the US dollar. Alongside the Euro Pound cross rate, where there is still enough room for this market or this currency pair to move higher, as long as there would be daily corrective moves on the pound prior to the continuation of the Euro Pound cross rate on a weekly basis. As you could see here, that is barely starting, with our most prices right now are still at the 0.7901, relatively real low. And if you compare that with your technical tool on the Fibonacci retracement from the high to the low, okay, it's much more than 100%. So at least looking at it on a medium to long term, it would be heading back to the 0.80 to 8170 level in the midterm to longer term outlook. Comparing that with the pound in itself on a monthly basis, we're looking at extensions as high as the 1.5950 to the 1.6 channel resistance level, although there may still be some move of daily corrective moves as long as there would be a slight recovery for the US dollar while it is resting on its Fibonacci's support level. So this confirms the market outlook that we have provided on the August 23rd for cable and for the cross rates Euro Pound, where the market has been more bullish, and hopefully that this video would be able to support and justify the market outlook and analysis on our MarketView report. Thank you very much, and only the best for your trades. Have a good day.